Hey guys, welcome to video 2 of the training. In this video we're going to go over how to use the default Poloniex charts, and we're going to go over the basics of support and resistance and actually how to read these candles and what they mean. Okay, so starting off guys, what we're going to do here is what we want to use initially for our basic setup is we want to come into this cog over here, the settings, and we want to turn on the Fib levels and we want to turn on Bollinger Bands only. Okay guys, we'll get into the other ones later on in the advanced trading because we want to use those with the trading view section. Okay, so what we want to do with the Fib levels is basically the Fibonacci level is a price from the low point to the high point. Now, depending on which time frame you're looking at and which amount of time you're looking at, the low and the high will obviously be different. So in crypto sense, you really want to look at the last few days, because what's going to happen is price moves very drastically. There's a lot of pumping, price to new highs, and then there's a lot of dumping, like panic sell-offs and so forth, guys. So you want to look out for the last week or so max to begin with when you're a beginner. Obviously, in the advanced section, we're going to go into multiple time frame analysis and how to use all of the time frames. So the time frames we want to use when we're just starting out are basically anything from the 2 hour down to the 5 minute chart, guys. We don't want to use the 4 hour and the daily because they're too long for what we're trying to achieve here for you guys for the basics. So after, let's say, look at this folding coin for example. Now, just recently in the last, probably last night or sometime, price has moved up massively. Okay, there's been a massive pump on this coin, and that's created a new high. Okay, so the new high is our top Fib level, and the bottom is where price started at, back here. What are we looking at 5 days ago? So that's our low point and that's our high point. Now, a lot of the time, guys, for the very basics, okay, we want to look for price to correct and reverse back down to at least the 50% level or lower. Anywhere below the 50% level are pretty much good buying opportunities. And even if you just follow this simple strategy long term, it's going to make you profitable even just doing this. So if you see price move up really high on a coin, never buy it as the coin's pumping, because you're just going to get stuck with those coins. Okay, and then once the sell-off is going to happen, because the guys that have bought at the low level, okay, they're going to be taking profit and they're going to be selling their coins as price is moving up. Now, once price gets to a certain point and it starts reversing, all the people that have bought right at the very top are basically either, a lot of them are just going to panic sell and sell off their coins as soon as they see it turn around, and that's what a lot of new traders are doing. They're basically losing when they don't need to be losing. So never buy at the top of a run, guys, as a massive move is happening, because you'll probably get stuck at the top. Always wait for the price correction to come back down and then buy into the market. So anywhere below this 50% level is where we want to be aiming. Anywhere down at, but good buy price points are down at the 38.2 down to the 23.6. Anywhere in that zone is pretty good, because what happens is if you buy in that zone, realistically you can take profit between anywhere in that zone and the previous high. Okay, and that's huge percentage, guys. We're talking 60-70% profit margin between this price point here and if you were to sell back at the price of the previous high again. Now, obviously that's going to take some time to get back to the previous high, but that's possible expectations. You know what I mean? That's possible price points. So we can take profit, even if you wanted to take profit 10, 20, 30% up. It's going to be much easier to get back to that price point, and then you've already got your profit booked in. So that's how you use the Fibonacci. Okay, so we want to, now on Poloniex, it automatically draws the lines in for you. You don't have to draw the lines in, so it is very basic and user friendly to do this method, even when you're very first starting out. Now, the Bollinger Band, okay, the Bollinger Band is basically, all we want to use the Bollinger Band for is the low line, this low line here. Okay, we don't want to worry about the high line. Don't worry about that, because what happens is as price gets moved up, the price moves apart like this. Okay, so other good buying opportunities are basically when the price comes back down and meets back up with the low level again, the low line again, if the line matches up with your fib levels somewhere in there, anywhere between the 50 down to the 23.6, if the Bollinger Band line kind of like matches up with that, and you've got the fib level in there as well, that's two things in your favor that it's a good buying opportunity. Okay, so that's what you want to use when you're very, very beginning, and these are the basics. Obviously, the more advanced stuff is in the trading view section, which we'll be covering as you get through the videos. Okay, and the other default thing on here is this MACD. You don't really need to use that at the moment. You can use it in terms of as a very basic structure level when this yellow line, which is the signal line, okay, when this yellow line is moving below these levels, the zero level. So there's a zero level right in the middle here. Okay, when price is kind of like below that, you can almost treat it like an oversold section. When price is above that, that's when price is being overbought. Now, in the trading view section, again, we go into another indicator called RSI, which is actually an overbought and oversold indicator. So don't stress too much about this, guys. You mainly want to use the fib levels in here and the Bollinger Band. Okay, so again, never buy when price is pumping up, and only buy when price is coming back down, or you see a good buy opportunity on another coin at already a low point before it moves up. Okay, so never want to buy at the top of the market structure after it's already moved, because you'll get stuck with those coins. You might get stuck with those coins for weeks or months. Okay, and then you run into the risk of not having that capital to buy a good coin, and then you worry about selling off, and then that's when you're going to lose profit. Okay, now the other thing we want to get into is how to use this thing down here. So if you want to change around the time frames, you can do so. Okay, you can change the zoom time, so forth. So I like to have it on about anywhere between 2 days and 4 days, and I use the 30-minute and the 2-hour charts a lot. And then this little point down here, you can actually drag that out to see more on that specific time frame. Okay, and then you can move that along there. So that's the basics of how to use the default Poloniex charts and the default Poloniex indicators. Now, the basics of support and resistance, guys, are basically support and resistance is when price bounces or touches off that point multiple times. Okay, so if you see here, okay, price has got to roughly about the same price point 3 times. Now that is considered, if price is moving up and it doesn't break that point, that's considered a resistance level. Okay, if price comes back down again and it doesn't break below a certain point, that's a support level. So support and resistance is only the difference in whether price is moving up or price is moving down. So don't get too confused, guys. Just make sure that you're using lines. So you're looking for price at where price has bounced off a lot of times. So if we look at about this level here, okay, now on the default Poloniex chart, unfortunately you can't draw on the charts. That's obviously what TradingView is for. So if you want to get ahead of yourself, you can go on TradingView and start drawing in support and resistance lines, but we don't want to do that yet. If you haven't used it before, obviously, because I need to show you how to do it properly. So support, this level here would be a good support level, okay, because price has bounced off around this level once, twice, 3, 4, 5, 6, 7 times. So anywhere around about this level would have been a good buying opportunity, because price had already come up, it's come back down again, price has come up, we've failed to break above these lines, this level, and then price has come back down to where the previous lows were. Okay, so that's a really good buying opportunity on this coin. So you could have bought anywhere along these coins. Okay, so that's how you want to use it. You want to look for price to come back down where it's not really breaking below there, and then that's going to be a good buying opportunity. Again, in line with the fib, and if the Bollinger Band lines up, great. If the Bollinger Band doesn't line up, don't stress about it too much, guys. It's only an indicator, okay? So you just want to look for price to come back down and touch those points. Now, candlestick patterns to look out for. Just in the basics, guys, you just want to look out for, on the higher time frames, you want to look out for candlestick patterns like this. When it changes for me, is it going to change? Go to a different coin and come back. Okay, so the only pattern I want you guys to look out for realistically is this one here, which is called a bullish engulfing. Okay, what that means is price around here. This is those few points we were looking at before with the resistance. Price has failed to break above these points, and then we've had a massive sell-off. So bullish engulfing basically means a larger candle than the previous candle. Okay, so a bullish engulfing to the downside or to the sell-off is this one here. A bullish engulfing to the upside is obviously this one here, the up move. Now, we're more interested in bullish engulfings to look for good buying opportunities. So we want price to come down, and then we want to buy at the low level so we can sell high. Okay, bullish engulfing as it takes off is good if you've already got the coins. Okay, because then you can look for areas to sell, and we'll already have some mapped out areas to sell at the previous high levels. So you're taking price on the way up, but then you don't sell off all your coins there, and then we look for to see where price is going from. So that, guys, that's the very basics of how to use the Poloniex charts, how to use very basic support and resistance, and how to identify it, and then how to also read the one candlestick pattern that we're going to be using. Okay, so one of the candlestick patterns we're going to be using. Sorry. So in the next videos, guys, I'm going to determine how to tell you guys which coins are good and bad to buy. Thanks for watching.